Mark question number 20. Mark question number 20, revision program. I'm going to start by straight away looking at the internal audit. So remember, ladies and gentlemen, that for internal audit, what am I supposed to look at really? For me to say that this internal audit department is a serious department, very few things. Number one, I would look at their technical competence. Are they qualified to do this job efficiently, to do a job that can be relied upon by external auditors? So are they competent? Number two, I will look at their reporting structure. If you're told that the internal audit reports to the chief finance officer of a company, internal audit reports to the chief finance officer of a company, is that right or not right? Is that right or not right? Red flag. Thank you very much. Thank you. Not right. That's a red flag. Who are they supposed to be reporting to? Who are they supposed to be reporting to? For these big established organizations, we expect internal audit department here to report to who? To report to who? To report to who? To report to, at least for us to say that there is some kind of a management. No, not management. To the board, no. Director, it is the audit committee. They should report to the audit committee alone. Audit committee alone. So they should really be in connection. I need to see, Doc. Some of us have not muted. Oh, there are people who are not muted. Okay. It should be audit committee. Thank you very much, Mayom. Thank you very much. Thank you very much. So quite a simple thing, really. So Mark, here we are told, always start by reading the requirement. We are told, evaluate the benefits to Mark Limited over outsourcing its internal audit function. You know, for internal audit, you must have been told for internal audit that either an organization will work with full-time employees, or they can decide to outsource the internal audit function. They can decide to outsource the internal audit function. Which one is better? Work with our own internal audit team or outsource? Which one is better? Which one is better? Which one is better? Should we work with our own internal audit people here who are full-time employed, or should we outsource? If you guys are not talking to me, I'll get someone to talk to me. Outsourcing is much better. Outsourcing is much better. Yes, I understand that they will be having their ups and downs both ways, but outsourcing at the end of the day is better. Then can a good student in this case here go ahead and they give me only 3? I don't want so many. Only 3 advantages of outsourcing internal audit function. Only 3. Only 3. Expertise, I like what I'm seeing there. Expertise, yes. Expertise, yes. You know, chances are, ladies and gentlemen, for us in this case here, ladies and gentlemen, whenever we are hiring our own employees, chances are we'll only hire, for example, the topmost guy who is very experienced, and then give him inexperienced people. But when we give this particular job to an outside organization, chances are this outside organization there has been in this business for over 10 years, right? So we have in this case here the concept of what here expertise, and then we have the independence threats. This organization that is out there really will not be having a kind of undue pressure, will not be having a kind of the threats will not be as much as compared to somebody who is here. Those threats, I know you know them, familiarity, isn't it? Remember, the external firm can keep on changing the people who are coming to work in our internal audit department. All right. Self-review, surface, yes. Thank you very much. So any other advantage, any other self-interest, yes, you can see self-interest, somebody who is employed here, who is earning 400,000. This person earning 400,000 a month, should he go saying something bad, something against the board, something against the chief finance officer? This guy will go home. So he'll be having a lot of fear as they work. So we have here from Jackson, competence, I like that, cutting of costs, of maintaining the internal audit staff. Yes, cutting of costs, I like that. Why? Because when I have full-time employees, there are those statutory deductions. There are so many things you have to do. Right now, remember, ladies and gentlemen, especially firms that pay gratuities, like every 3 years, companies are paying quite a lot to staff. Why can't I have, in this case here, a firm that I bring on board? We agree with them. I'll be paying you 100,000 as an organization. Mujipange. Hakuna mambo ya NSSF. Hakuna mambo mengi ni withhold tu bas na kuwapatia yao. Hakuna mambo, for example, ya kupelekwa kotini in terms of what here? Labor relations. Great. Ladies and gentlemen, here we are. You guys are very bright. So evaluate the benefits to Mark Limited of outsourcing its internal audit department. Great. Number 2, explain the potential impacts on the external audit of Mark Limited if the decision is taken to outsource its internal audit function. Ladies and gentlemen, if we make a decision of outsourcing the internal audit function, will that be good for the external auditors or bad? What is the relationship between internal audit and external audit? Remember, these external auditors, when they come on board, they are going to evaluate the work of internal auditors. Should they get that these guys are competent enough, that they have very good working papers, they have done quite a nice job, that their job is being respected by the seniors, whenever, for example, they make recommendations about internal control improvements, the board is taking them seriously, then the external auditor will place reliance on their work. Placing reliance on their work means doing little job, right? So I'm waiting in this case here to see what your answers are. I'm waiting to see what your answers are. It's better. Quality of work, yes. Yes. Ladies and gentlemen, don't worry. We shall go here. Now, we are still reading the question here. Recommend procedures that could be used by your firm to quantify the financial loss suffered by Mark Limited as a result of the fraud. Basically, the concept of forensic fraud examinations. Very easy, really. Nothing there. Prepare a report to be presented to Danny and Stella in which you compare the responsibilities of the external auditor and of management in relation to the prevention and the detection of fraud. Ladies and gentlemen, whose duty is primary as regards to prevention of fraud and errors? Is it management's duty that is primary, or rather, is it who has that primary duty to detect and prevent fraud? It is management. It is management. That is something that I need to know from the word go. It is management who have that primary duty. Myself as an auditor, that duty is secondary to me. I can't even guarantee you that I will be able to prevent and detect frauds. No. What I'll tell you is that I'm going to put in enough sufficient, appropriate audit procedures. I'm going to gather sufficient, appropriate audit evidence such that I will be able to detect these frauds should they come my way. But remember, I'll remind you as a management responsibility, your work is to ensure that the ICS is strong. Your work is to prepare financial statements. Your work in this case is to ensure that you prevent, detect fraud and error. For me, that's a secondary thing. So what I need, ladies and gentlemen, you to understand is that you need this kind of a high level, what we call the helicopter knowledge. Once you have it, then expressing yourself in some of these questions here will not be a big thing. It will be a simple thing. It will be a simple thing. Now, ladies and gentlemen, here we are told here, assess the benefits and drawbacks for Mark Limited in establishing an audit committee. Ladies and gentlemen, it's very important for us to have a committee within the board which is able to focus on preparation of financial statements, which is able to focus on working with the audit team, right? Very important, very important. These are the people within this committee who are taking up actually the responsibility over what here financial reporting, very important. So they are quite many advantages, independence. They provide a whistleblowing channel for employees within the organization, etc., etc., etc. And of course, there are disadvantages. Disadvantages of is there anybody who can raise one disadvantage of an audit committee? Is there somebody who can raise one disadvantage of an audit committee? Only one, like this. Only one disadvantage. Only one. Is there somebody who can raise one disadvantage? Only one. Only one. Only one disadvantage. Only one disadvantage. Only one. Cost. Cost. It comes with a cost. Those guys are not cheap. Also, in terms of recruiting them, it's not easy to get people who have got that expertise, right? Yes, they may lack the know-how. Very good. Ladies and gentlemen, at the end of the day, the audit committee, not unless you have got managers, can divide the board. Can divide the board, yes. Can divide the board quite a lot, yes. Now, ladies and gentlemen, let's now read the question very first. And if you allow, Mwalimu here will read, I don't know whether there are people here who can match my speed of reading. I can read very fast. So please be very attentive. That is what I'm implying. It's Mark Limited. It's a large private company whose business activity is events management, involving the organization of conferences, meetings, and celebratory events for companies. Mark Limited was founded 10 years ago by Danny Hudson and his sister Stella, who still own the majority of the company's shares. The company has grown rapidly and now employs more than 150 staff in 20 offices, quite a big organization. You are a manager in the business advisory department of Lack & Company. Your firm has just been engaged to provide the internal audit service to Mark Limited. In your initial conversation with Danny and Stella, you discovered that currently there is a small internal audit team under the supervision of Lindsay Montana, a recently qualified accountant. So when you are told that this accountant graduated just the other day, what comes to your mind, you good students? A recently qualified accountant. What comes to your mind when they make use of this kind of a good title? What comes to your mind? 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 Lack of experience. No experience, inexperienced person, right? Thank you very much. Thank you very much. Great. A recently qualified accountant. Before heading up the internal audit department, Lindsay was a junior finance manager of the company. Junior again. The members of the internal audit team will be reassigned to roles in the finance department once your firm has commenced the provision of internal audit service. Mark Limited is not an existing client of your firm, and to gain further understanding of the company, you held a meeting with Lindsay Montana. Notes from this meeting are shown below. The internal audit team has 3 employees, including Lindsay, who reports the finance director. We started by you guys telling me that this is wrong. Internal audit should report to the audit committee. The other 2 internal auditors are currently studying. These guys are students like yourselves, and we're giving them very senior roles. Internal audit is a senior thing in an organization. The other 2 internal auditors are currently studying for their professional examination. If I'm an external auditor, I'll say I'll not rely on these people's reports. These are students, let them go to hell. First of all, they finish what year? Their professional examinations. The team was set up 2 years ago and initially focused on introducing financial controls across all of Mark Limited's offices. 9 months ago, the finance director instructed the team to focus their attention on introducing operational controls in order to achieve cost savings due to a cash flow problem being suffered by the company. The team does not have time to perform much testing of financial or operational controls. They don't have, this is their primary thing. If they're in internal audit, controls is their thing. In the course of her work, Lindsay finds many instances of management policies not being adhered to, and the managers of each location are generally reluctant to introduce controls as they want to avoid bureaucracy and the paperwork. As a result, Lindsay's recommendations are often ignored. 3 weeks ago, Lindsay discovered a fraud operating at one of the offices while reviewing the procedures relating to the approval of new suppliers and the payments made to suppliers. The fraud involved an account manager authorizing the payment of invoices received from fictitious suppliers, with the payments actually being made into the account manager's personal bank account. Fraud. Lindsay reported the account manager to the finance director, and the manager was immediately removed from office. Lindsay reported the account manager to the finance director, and the manager was immediately removed from office. This situation has highlighted to Danny and Stella that something needs to be done to improve controls within the organization. Danny and Stella are considering taking legal action against Mark Limited external audit provider, Manhattan and Company, because their audit procedures did not reveal the fraud. So you can see Danny and Stella here, they don't know. They don't know what external audit is all about. So we are told Danny and Stella are deciding whether to set up an audit committee. Mark Limited is not required to have an audit committee, but the external auditors recommend that a disclosure note explaining whether an audit committee has been established is included in the annual report. So evaluate the benefits to Mark Limited of outsourcing its internal audit function. I would want to go to the answers very first. It's question number 20. It's question number 20. Question number 20. So question number 20 is here with me. First page, question number 20, Mark. So benefits of outsourcing the internal audit department. Benefits of outsourcing the internal audit department. Staff. Lindsay only qualified recently, and the other two internal auditors are still studying for their professional qualifications. There is therefore a question mark over whether the team as a whole is sufficiently technically competent and experienced to do the work required of it. An external provider would have access to good quality staff. This would improve the quality of work done, and it would release Mark Limited from the burden of training and qualified staff. Authority. It appears that Lindsay recommendations lack sufficient authority for them to be taken seriously by managers, possibly because she only recently qualified and was previously a junior manager. What you tell us really. An external provider may command greater authority so that its recommendations may be more likely to be followed. Independence. At present, the internal audit team reports the finance director, and there is therefore a chance of it being reluctant to criticize the finance department overtly. An external provider would be under no such restrictions. Resources. The internal audit department appears to be under-resourced as it lacks the time to perform much testing of the finance or operational controls. Outsourcing would give immediate access to a well-resourced internal audit function. Focus. At present, internal audit seems to lack focus or a specific remit. Its work seems to be determined by the finance director's priorities. An external provider will be able to focus on the full range of the internal audit work. Remember, these guys, external guys, will even come with their own audit plan. Staff to finance department. Moving Lindsay and her team into the finance department is likely to improve the control environment and the embedding of controls procedures within the organization, as the team will bring with it the perspective they have gained from working in internal audit. Now, ladies and gentlemen, look at this answer. What do you think of this answer? Is it an answer that is of a high quality or poor quality? High quality, poor quality. Please answer me and I'll tell you why most of us fail in this paper. Tell me whether it's of high quality or poor quality. Very good. You see what Oscar is telling us? high quality, making reference to the case. Most of you would have just said those one-liner statements, benefits of outsourcing, blah, 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 without making reference to the case. And if that happens, of course, we end up in this case here giving you a half a mark, a half a mark, a half a mark, a half a mark. So if the question had 10 marks, you'll end up getting 5 or even less, because even your one-liner statements, not all of them will be correct. Not all of them will be correct. So ensure that as you discuss some of these points, ensure that you are able to do what here, you are able to relate them to the case. Thank you very much. Ladies and gentlemen, we come back to part B of the question. So part B of this question, using the work of internal auditors and what was the question asking about? What was the question asking about? Still this concept of relating, yes, relating the internal auditors to external auditors. Now, in line with ISA, don't get worried with this, they're the same. ISA 610, the auditor will have to consider internal audits, organizational status, and the relevant policies and procedures. So what is their status in the organization? Before the external auditor makes use of the internal audit work, they must get to know what their status in the company is. Internal audit's competence is key. Whether internal audit's approach is systematic and what are disciplined, they will then evaluate the specific audit work they are interested in. ISA 402 requires the auditor to consider the impact that outsourcing internal audit will have on Mark Limited's accounting and control systems. It is likely that Manhattan and the company will place more reliance on an outsourced internal audit function than on the present internal audit team, as such a function is likely to provide work of better quality. This may lead to reduced audit fee, which will be helpful for Mark Limited in view of its concerns over cash flow. Look at that argument. I mean, these guys are geniuses, strokes of a genius. Note, however, that auditors are prohibited from using direct assistance from the internal audit function. If new internal control procedures are implemented as a result of outsourcing internal audit, this may increase the amount of audit work required. Alternatively, the amount of audit work could decrease if new procedures are very significantly better than the old ones. Ladies and gentlemen, here the thing that you can easily remember is that as an external auditor, when I'm given work at RCM Online College, I'll come and ask a simple question. Do you guys have audit, internal audit? When they tell me yes, there are chances that I'll place reliance on their work. But before I place reliance on their work, I need to know who these guys are. What is the status in the organization? Who do they report to, right? Are they competent? Are they competent? I'll have to look at the order of their work, right? Right? Are they very organized? How are they doing their filing of working papers? What is the quality of the evidence that they collect? When I'm satisfied that these guys are doing a good job, they're competent, their work is being listened upon, people are able to hear what this internal audit department is saying, and they are able, of course, to work on whatever recommendations they are given by the internal audit, then as an external auditor, I know my work will be very much reduced because of what here I will place reliance on the internal audit department. And we've been told something very important, that even the client themselves, they'll be happy because when the external auditor are able to place reliance on the work of the internal audit, they're going to do little work, meaning that the audit fees will be reduced. Remember, in most cases, these guys will bill you. There is a fee that they bill you, which is based on the hours, time spent in the company. So if you don't put in your controls very well, if you do, you have so much in terms of, for example, fraud is going on, the auditor is going to stay in your company for a long time, and at the end of the day, in this case, they'll bill you, they'll invoice you for all the hours they've spent in your firm. So if you want things to be good, ensure that you empower your internal audit department. Great. I hope up to there we are together so that I can move on. Remember, it's a high-level revision. It's a high-level revision. I don't want you to start cramming. After all, the most important thing, you're not writing anything. This book is yours. Can you agree on that? This book is yours. This book is yours. Mine should be high level, high level, high level, high level. Thank you. Great, 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 great. Okay. Now, part C, they asked about procedures to quantify the loss. Do you remember that there was some fraud? Do you remember that there was some fraud? Do you remember that there was some fraud? If you remember that there was some fraud, I would want, in this case here, somebody to give me the audit procedures they would use to quantify the loss. Could you kindly write something down, however small? What are those audit procedures that you shall use to quantify the loss as a result of the fraud? Those things are the same. One-liner statements are the same. They're the same. Before I project the answer again, they're the same. They're the same. They are the same. They're not talking to me at all. I don't know why. They are not talking to me at all. I don't know why. They are not talking to me at all. Fraud, perpetrator loss. Not like Betty. Betty, you are talking. Compare your book balance, accuracy, do kind of reconciliations. But what are you reconciling here? Forensic accounting. Forensic accounting. I like what Nadia seems to be knowing this thing. Nadia, ulijulia wapi maneno? Nadia amesema atatumia the CAAT. The CAAT. The CAATs. The CAATs. The CAATs to be able to track down, on these payments. For example, you can even decide to make use of Excel as your CAAT. CAAT, I'm so sure there must be somebody ajui full meaning of CAAT. CAAT is a good procedure. So like Excel, what I'll do, I'll come and VLOOKUP. I'll VLOOKUP one supplier, the supplier like now the manager. This manager, the manager who we saw up there, whose account was being used here to receive money, right? I'll be able to use the VLOOKUP, I'll look up for his name, and straight away, within a second or 2 seconds, I'll be having a list of all the suppliers who are able to pay money through his bank account. I like CAT. Great. Analytical reviews. I'm here listening. Analytical review, I like it, but what are you reviewing here? Sharon Mwaneki ameuliza, it's good to be open. What does CAT stand for? Perhaps wengi hawajui, wacha nikupatie moja. At least there is a computerized something. Review terms of insurance cover. I like that. If there is any insurance cover, I would want to satisfy myself whether the value of these items have been covered somewhere. You guys are not giving me good pregnant points. Kwa mfano, sisikii mwanafunzi hata mmoja akiongea kuhusu review suppliers statements. Review suppliers statements. Sijaona hata mwanafunzi hata mmoja. Sijaona hata mwanafunzi mmoja akisema that I will circularize supplier circularization. Ask these suppliers here to tell you the amounts that they are owed. There is somebody who is talking about circularization there. Great. Thank you very much. Great. Great. I'm not seeing anybody talking about reviewing routines, review process for adding approved suppliers to the list. Review process for adding approved suppliers to list. I'm not seeing anybody who has, there are invoices involved here. I've not seen anybody mentioning tracing invoices to supporting documentation. I'm not seeing anybody. I've not seen, no, I saw it somewhere. Somebody who spoke about water authorization. Review all payments that were authorized by the account manager. And I can see students are talking now. So let's get back and read the answers here. Let's get back and read the answers here, ladies and gentlemen. We are told procedures to quantify the loss includes use of computer techniques to identify other payments made to the account manager's bank account and the consideration of whether these payments are legitimate. Review of all suppliers to whom payments were approved by this manager and the comparison with the list of approved suppliers. Testing a sample of payments to each supplier back to the invoice. So the payments in the bank statements there, I'll be able to trace them back to the invoice. And then tracing the transaction through to existence in the form of delivery notes, etc. Review terms of insurance cover. There is somebody who spoke of insurance cover. That's a person you should clap for. So review terms of insurance cover taken out by Mark Limited with a view to a possible claim, discussion with legal counsel over whether any reimbursement might be received from the manager in the event of charges being pressed. Ladies and gentlemen, if you allow, Mwalimu here will go straight away to part B. Is that okay? Can I go to part D directly, the report, which is to explain the auditor's responsibilities on fraud, audit committees, etc. Can I go to part D? Yes, thank you very much. Great. So we are told introduction here, the objective of this report are to explain, by the way, let me tell you something. Anytime students have been told here to write reports, hawajuangi vitu mingi, kitu ya kusema to who, right? Subject matter, right? If it's a memo, for example, it has got a date, right? This is a report, of course, report must have a conclusion, right? Right? So here we are told, as a gentleman, introduction, the objective of this report is to explain the responsibilities of the external auditor and management regarding fraud and to outline the benefits and drawbacks of Mark Limited establishing an audit committee. Responsibilities on fraud. According to International Standard on Auditing ISA 240, the auditor's responsibilities relating to fraud in an audit of financial statements, the primary responsibility for preventing and detecting fraud lies with those charged with water governance and management of an entity. So the primary responsibility for preventing and detecting fraud is the work of management. Management does this by establishing a system of operational and financial controls, along with an appropriate cultural environment for those controls to reduce the risk of fraud taking place. The auditor's responsibility is to obtain reasonable assurance that the financial statements are free from material misstatement, whether due to fraud or error. My main work as your auditor, when I come to audit you, remember my work is to provide an opinion. My work is to provide an opinion as to whether your financial statements here portray a true stroke fair view. All right. So we are told here, management, no. The auditor's responsibility is to obtain reasonable assurance that the financial statements are free from material misstatement. That is true stroke fair view. The auditor is only responsible for detecting fraud. Only responsible for detecting fraud, therefore, insofar as it affects the accounts by causing a material misstatement. For instance, the fraud recently perpetrated by an account manager in Mark Limited may not have had a material impact on the financial statements, in which case the auditor would not have been responsible for detecting it. There is some overlap between the responsibilities of management and the auditor on internal controls, in that both have to make an assessment of the effectiveness of controls. It's possible that the auditor may make a recommendation to management of ways for it to improve the effectiveness of controls. The key difference, however, is that it is the responsibility of management alone to implement a system of controls that prevents and detects fraud. Ladies and gentlemen, are we together there? Are we together there? Are we together there? But that when it comes to issues to do with the fraud and error, it is the major primary role of management. The auditor, remember, an auditor, I'll always get ways of defending myself. Remember the case of PwC versus Uchumi, right? When some shareholders took PwC to court, PwC came and said, there is no way would have detected the sale stroke leaseback transaction of the Uchumi head office that was fraudulent. There is no way, because our role, or rather our work, number one, is done on a sample basis. We don't test like the entire thing. Our role basically, and remember our work basically works around what here? Financial statements. Financial statements. So in this case here, any errors outside there, especially if they're immaterial, they'll not come in this case here to our attention. This question required you to talk about something very small. Whose responsibility is it to ensure that they implement controls of detecting stroke preventing what here? Fraud and errors. It is the management's responsibility. Great. Now from there we go to the audit committee. So audit committee, what do we have here? The benefits to Mark Limited of having an audit committee, number one, increased confidence in the credibility of financial statements. This may help Mark Limited to raise external finance in the future if required. If you take a step towards some bank here to borrow, when the bank, in this case here, sees that an organization has got an audit committee, automatically your financial statements will be taken to be what? To be credible, to be more credible. The committee would specialize in financial, I told you this, focus. They would specialize in financial reporting problems and to some extent discharge the director's responsibilities in that area. This would free the executive directors to devote their attention to management. The committee would take on many responsibilities in relation to the external auditor, including making recommendations on auditor appointment, assessing auditor's independence, and working with the auditor to improve audit quality. In case of conflict between the executive directors, e.g. the finance director, and the employees, internal audit, the committee may provide an impartial body for the external auditor to consult. Establishing the committee would help improve the control environment, which would help to prevent future frauds and may improve the efficiency and the cost of the external audit. An audit committee is a requirement of many corporate governance codes, and in future, Mark Limited wishes to seek a listing. They would want to be listed. It would have to establish an audit committee. Even in Kenya here, if you want to be listed at the stock exchange, you must have an audit committee. So start preparing today. Members of the audit committee would bring valuable business skills and knowledge into the company. They would be mainly in an executive, very, very important here. Remember, audit committee members are supposed to be what here? These are non-executive. So they're coming from out there. They're not lecturers at RCM. They're not full-time directors at RCM. These are guys we simply bring on board who are working full-time in other organizations. Like they could be directors of one, for example, EABL, another one, for example, at KCB. When they come and sit with us, they are coming on board with a lot of what here? Expertise. They're coming on board with a lot of expertise. All right, the drawbacks to Mark Limited of having an audit committee include costs. Members of the committee should ideally have a high level of experience and expertise, for which they would require a substantial fee. It can be difficult to recruit audit committee members with a level of experience sufficient for the conclusion. This report distinguishes between the responsibility of management for preventing and detecting fraud and for establishing a system of internal controls to do this, and that of the auditor, which is for detecting material misstatements. An audit committee would provide Mark Limited with a number of benefits, particularly in view of what may be a relatively weak control environment at present. However, the cost and difficulties associated with establishing such a committee must be considered what year carefully. That is the end of that question. And of course, you can see that these guys are not brighter than us. The good thing with them is that they really know how to relate their answers with what year, the case. They know how to relate their answers with the case in question. Great. So can I go to the next question? Can I go to the next question? My time is almost up. My time is almost up. I would want at least to do 2 questions so that CPM Adede will only come and just brush on whatever I'll have done. Great. So 21, question number 21, Falcon Heights. It's a big building in Nairobi called Falcon. Great. So always start with, I don't know what normally happens with students, especially when they see numbers, when they see in auditing and assurance, if you give them like a statement of financial position like this, wengi imagine hawata fanya chochote kwa iswali. Oh yeah. Kwanza kuuliza sasa imekuwa tena financial reporting. Kwanza ikuwe na kitu continuing and discontinued operate. There is really nothing here, nothing whatsoever. So they want us to respond to the partner's email, partner's email. Let's see what the partner is saying here. Let's see what the partner is saying here. We are told here, Falcon Imperial Limited manufactures and distributes electrical and telecommunication accessories, household durables, e.g. sink and shower units, and building systems, e.g. air conditioning, solar heating, security systems. The company has undergone several business restructurings in recent years. Finance is to be sought from both a bank and a venture capitalist in order to implement the board's latest restructuring proposals. You are Helen Hiller, a manager in Hall Falcon, a firm of CPAs. Jennifer Jones, a partner in Halcon, has just sent you the following email. So you can see to Helen Heller at whatever Falcon. It's coming from Jennifer, whatever, same organization. Date is December. Subject is a firm that you are auditing. She forgot to say here, dear Helen. I don't know whether it's because she's senior, but I feel that this is quite harsh. Just Helen, you don't do that. Do you find this to be okay? Or is that an enough salutation? No. Helen, we have been approached by Paula Gandalf, the CFO of Imperial, to provide a report on the company's business plan. This is prospective financial information, PFI. It's quite big, huge in your syllabus. Company's business plan for the year to 31st December 2010. From a brief telephone conversation with Paulo Gandalf, I have ascertained that the proposed restructuring will involve discontinuing all operations except for building systems, where the greatest opportunity for increasing product innovation is believed to lie. Imperial's strategy is to become the market leader in providing total building system solutions using new fiber optic technology to link building systems. A major benefit of the restructuring is expected to be a lower ongoing cost base. As part of the restructuring, it is likely that certain of the accounting functions, including internal audit, will be outsourced. We have obtained a copy of Imperial's interim report for the 6 months to 30th June 20X9, on which the company auditors, Discopio, provide a conclusion giving a negative assurance. Remember, negative assurance is a good assurance, right? Negative assurance. Is it a good assurance or a bad assurance? We talk of negative assurance. Somebody talk to me tonight. Somebody talk to me tonight. I'm eating into someone else's time. I'm eating into someone else's time. Is negative assurance a good report or a bad report from the assurance provider? Good report or a bad report? What are they telling me? Let me check here. Negative assurance. It's limited assurance and it's bird. I've not seen Mary's comment. It's a good one. Now, when you talk of negative assurance, this is that assurance. I know, of course, you guys, I know what you're talking about being limited. It may not really be very good because the level of assurance there is quite low. But you see, we have got negative assurance and the positive assurance. Negative assurance and the positive assurance. Do you know how normally negative assurance is structured? How is negative assurance structured? Have you done this in your syllabus? That concept of saying that nothing has come to my attention. Nothing has come to my attention. Have you done this in your syllabus? Have you done this? Have you done this? Have you done this in your syllabus? Syllabus difference between negative and positive assurance. Please look at your notes. Look at your notes. This is something that is very important for you. Right? Look at your notes tonight. Okay. I can see a comment here. I can see a comment here. Ah, great. 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 Please ensure that always your videos are off because of my internet. Ensure that your videos are always off. Great. Yeah. So you mtaangalia baadaye. So please don't forget, especially for those of us who are in advanced financial reporting, we said after exams, we need to go out there. Nope. We need to go out there and breathe a little bit. And we said we are going to Masai Mara, isn't it? Is it 1 night, 2 nights? Clement, you're the man spearheading this. There are students in a particular group. There are students in a particular group. Not 1 week, it will be very expensive. Oh, Clement says 1 night. 1 night. Yeah. 2 days. 1 night. So Clement, are you able to provide for 7K? Great. Yeah. So one of us here is in the travel industry, but apparently he does not know how to market himself. This man, Clement, I don't know what to do. He does a very good job. I've really traveled with him, but he's not selling his services here very well. You know, for 7,000 to see the Mara, right? I hope it's full board. That 7,000 should be full board, right? And please, and please don't take us to a tent. Don't take us to a tent. No, there are people who really not like that experience of camping inside a tent. Take us to a good place, right? And also try to do like, give people like myself, I don't want to go and sleep in the Mara for 1 night. Give us options. Somebody can pay a little bit more, right? Yeah, generous, yeah, right, yes. Maybe you could even help us market this thing. Yes, we would want you to come with your families, right? With your families, like myself, I'm coming with my kids, I'm go there with my lady, right? And then she'll be able to confirm to you how we did a very simple wedding, right? No. So yes, with family, yes. Yes, what we could do, I know why he chose for the one night. I know why he went for the one night. It's because of some students who are saying, hey, it's quite, no. Just give us a good package. Give us a good package. Tell us for 2 days, it'll cost you this much. For 3 days, it'll cost you guys this much. Right? 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 Thank you very much. So now we continue. That was a good time for break. It's important for us to have a break. Great. So come back here. So here we are told, I have attached this email, an extract of information from interim financial report. I'm going to be meeting with Paulo next week and would like you to prepare some briefing notes for me to use at the meeting, in which you explain what is meant by prospective financial information, distinguishing between forecasts and projections. There are not very many students who know how to differentiate between these two words. It's always there in your exam, forecast and projections. Comment briefly on the level of assurance provided on engagements to review prospective financial information. Explain the matters how Falcon should consider before accepting the engagement to report on Imperial Limited's prospective financial information. Ladies and gentlemen, before I look at the answer, could you kindly try explaining to us what is the difference between this forecasted PFI and the projected PFI? Projection. What is the difference between those two terms? I'm here really all eyes to see what you guys are writing there. Difference between prospective PFI and forecasted PFI. Is there anybody who is able to differentiate between the two? Anybody who is able to differentiate between the two? The actions, okay. Forecasted is expected and projected is hypothetical. This must be a genius. This must be a genius here. Forecast is just expected information based on what the management expects in the future. There will be corona, and then this is how our information, how our income statement will look like in 2023. That's expected. And then when we talk of projected is a hypothetical. Projected works with hypothetical assumptions. Yes, prepared on hypothetical assumptions, forecast based on best what year estimates. Great. Now with that, we should be able to see what the answer has for us. Describe the procedures that a professional accountant should undertake in order to provide a report on profit forecast and forecast statement of financial position for Imperial Limited for the year ending that. Explain the matters Falcon should consider before accepting the engagement to report on Imperial Limited's prospective financial information. You guys are geniuses, you know. I'm even wasting time here. Why would you allow Mwalimu to waste time over things that you are so good at? tell Mwalimu this one, we are good at this. Give us a break. We even go to Masai Mara even before we do our exams, because now we are ready. We are more than ready. We are more than ready. Great. So Falcon is here with me. Yes. So prospective financial information is information based on assumptions about events that may occur in the future and the possible actions by an entity. Prospective financial information can be of two types or a combination of both. PFI, I'm repeating again, is information based on assumptions about events that may occur in the future and the possible actions by an entity. So if we know, for example, that this event, like now the Russia and Ukraine war, I mean, if we are able to project and say that come end of this year, we are going to be affected badly, we are looking at the future. Things keep on changing in the future, right? So prospective financial information can be of two types or a combination of both. Forecasts are prospective financial information based on assumptions as to future events, which management expects to take place, and the actions management expects to take, best estimate assumptions. How about projections? These are PFIs based on hypothetical assumptions about future events and the management actions, or a mixture of best estimate and hypothetical assumptions. Prospective financial information is difficult to give assurance about because it's a highly subjective, and this makes it a difficult area to examine and report on. Hence, the level of assurance provided is always negative, as opposed to external audit, which examines historical financial information and where the assurance provided is reasonable. Guidance on reporting on it is given there. The examination of prospective financial information, the ISAE, suggests that the auditor expresses an opinion, including a statement of negative assurance, and as to whether the assumptions provide a reasonable basis for the prospective financial information. So here you're coming to audit basically the assumptions. An opinion as to whether the prospective financial information is properly prepared on the basis of the assumptions and the relevant reporting framework. Appropriate caveats as to the achievability of the forecast. As an auditor, you need to put some caveats at the end of your report, warning the users. Tell the users that this is a futuristic information that you've got no control over. That is why you are giving a low-level, limited assurance, the negative assurance. Now, I would want to repeat this, ladies and gentlemen. When you go later on and look at your notes, I would want you to be so good at differentiating between forecasted and prospective projections. Projections. I would want you to be good at differentiating between PFI that is forecasted and the PFI that is projected. The PFI that is projected, ladies and gentlemen, is that PFI that is based on hypothetical assumptions. For those of you who have done MBAs or who are doing research, you must be knowing what a hypothesis is. So if it's a projected PFI, then automatically, ladies and gentlemen, we must have those hypotheses, the null hypotheses. We have in this case here the alternative hypothesis, right? Yes, disclaimer for caveat, yes. Yes, so remember hypothesis. I mean, when you are hypothesizing, you're looking at some scenario in future. You are asking yourself what if questions. So I'll come and hypothesize and say that this war, Ukraine vis-a-vis Russia war, will eat our profits by $1 million US, right? So when I start with that and make that a null hypothesis, then automatically, I will be able to have like very many, you know, the projected hypothesis, ladies and gentlemen, is quite, it's like research. You do a thorough research for you to be able to come up with projected. But forecasted is quite an easy one. Both of them, they are assumption-based. But remember, for forecasted, the assumptions are quite easy. You're only looking at the future events. What if this happens, this happens. You don't have those many hypotheses like that. I can see what Sue is telling me there. And again, you don't even, ladies and gentlemen, need to be so good in those definitions. No. So long as you remember that projected makes use of what here? Hypothetical. The moment, Mamaka, if I see you mentioning the word hypothetical under projections, straight away, I'll pick my pen, put a very big tick, and then put there 3 out of 2 marks, right? 3 out of 2 marks. And then the most important thing that we have learned in this question, ladies and gentlemen, is this fact that we shall always, for PFI, we shall always give what we call a negative what? Assurance. Negative assurance. Here we cannot carry out an external audit on PFI. Ladies and gentlemen, listen, remember for us, as external auditors, we always report on what? What has already taken place. Financial statements for the year ending, back. And then we are able to dig in. We dig in. Once we have dug in sufficiently, then we shall be able to give what we call reasonable assurance. And tell, in this case, here, the users of these financial statements that for sure, the financial statements of RCM College portray a true stroke fair view. I'm giving a reasonable assurance. I'm giving an opinion depending on the evidence that I've collected, enough evidence I dug in. So I'm giving a high level assurance. But now information that is futuristic, information that is futuristic, ladies and gentlemen, there is no way you can be quite sure about what will happen in the future as an auditor. All right? Why? Because the future, those assumptions, of course, are very subjective. Those directors, of course, if they want to get a bank loan, they would want to make assumptions that really favor them. So as an auditor, I'll come and explain that here, because of the information that is available, there's not enough information, right? I'm only giving a negative assurance. I'll have to underline that. And in the negative assurance, this is how I will put it, that there is nothing that has come to my attention to make me doubt the PFI figures. There is nothing that has come to my attention. I'll be taken to court in future. When I'll be taken to court in future regarding this, I'll tell them, look at even how my negative assurance opinion has been given. There is nothing. There is a possibility that there are things, but they have not come to my attention. If you remember the various types of assurances, we've got what we call absolute assurance. Then we have reasonable assurance. And then we have a limited assurance. And of course, at last there we have no assurance at all. So we start with no assurance, limited assurance, reasonable, and then absolute, right? We don't have any absolute assurances outside here. Not unless we're pia ni muganga. Atunambia mtu absolutely. No. Normally nakuanga reasonable assurance for external audits. Negative assurances for all these other engagements that these people may want us to do what here to provide assurances upon. Maybe somebody comes and tells you, hey, I want to take these financial statements to tax computations to KRA. Could you kindly come and have a look at them? If he gives you limited time, maybe he tells you just take like 1 or 2 days. I don't have enough time to dig in. It means, ladies and gentlemen, that I will be able to simply look at, I'll end up giving what we call a limited assurance by saying there is nothing that has come to my attention that warrants me to doubt the figures that are here. All right. Ladies and gentlemen, we are told here an opinion as to whether the prospective financial information is properly prepared. This I have to give, yes. And then we have, of course, the caveats, what somebody called there, what here? Disclaimers. You must provide disclaimers. Matters to be considered before acceptance. Before you accept, ladies and gentlemen, this kind of a job, what will you look at? The terms of engagement. In particular, Hal Falcon should clarify whether there will be any restrictions put in place in terms of access to information and personnel. Status of Paulo Gandalf. There may be an issue of independence if Paulo both produces the PFI and appoints those who are responsible for reviewing it. The nature of the business plan, this could be made up of a number of different elements, including profit forecasts and cash flows. The content needs to be confirmed, as the procedures which will be adopted will depend on the nature of the material covered. The intended use of the PFI, in this case, the information is to be used by a bank stroke venture capitalist as a basis to determining whether to finance the business restructuring. It's likely that this information will be a significant factor in the decision-making process. All right. The specific requirements of the recipients. If a bank or venture capitalist has already been identified, they may have specific requirements of information in terms of content and presentation, like the UN. When you want to do something for them, they'll give you a structure. The nature of the assumptions, they may be best estimates or hypothetical assumptions. Ideally, Hal Falcon would wish to be able to distinguish between the two. Probable reliability of information, the period covered by the information, form of opinion required. Normally, this would be a statement of negative assurance. The time available is very important. Experience of Hal Falcon staff. The firm should only accept the appointment if they have the necessary expertise to perform the engagement. Knowledge of the business. Hal Falcon needs to be confident that they will be able to obtain sufficient level of knowledge of the business to be able to evaluate whether all significant assumptions required for the preparation of the prospective financial information has been identified. Degree of secrecy required. This may go beyond the normal duty of confidentiality. Communications with the Scorpio, the firm. In particular, Hal Falcon would wish to inquire if there was any reason as to why they should not accept this appointment. Remember, the Scorpio is the current external auditor. This may be an issue, particularly as the Scorpio have not been asked to perform this work. Provision of other services is some big consideration for me. Hal Falcon may be able to offer external audit services and internal audit services, as these are currently outsourced. I hope you guys have been, of course, I know you would have needed even more time for me to go through this slowly, but I hope you guys have been able to pick some high level points, like what should I consider before I accept this job? There is competence, there is nature of the information, there is, in this case, the users of the information. If I know who these users are, I'll know what they may want as I'm providing this assurance, right? I'll have to consider and get, of course, to understand from my client that he knows the opinion that is expected of me, the assurance that is expected of me. Does he know that I'm going to give a negative assurance? What time is he giving me for this work? Do I have resources that will be able to really do that particular job within the stipulated time, right? Communications with the current auditors, etc. So can I go to something different? 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 These guys are not talking to me. They're tired. They're tired. I can see 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 they're tired. Great. So procedures which are applicable to all PFIs. Procedures applicable to all PFIs. Discuss with management the way in which the PFI is prepared. So discussion. Remember the RAEOU. So A, inquiry, discussions. Compare the actual results of previous restructuring with forecast to determine overall level of accuracy of PFI. So you're analyzing. Determine who is specifically responsible for the preparation of PFI and assess their experience and expertise. Again, you're inquiring who made this. Assess the role of internal audit and other control procedures over the preparation of PFI. Check the accounting policies normally adopted by the company. These should have been consistently applied in the preparation of the PFI. Check the arithmetical accuracy of the PFI by making clerical checks, such as the computations. Internal consistency should be also assessed through the use of analytical procedures. Obtain written representations. This is quite common. This is quite key. Obtain written representations from management regarding the intended use of the prospective financial information. Profit forecast, financial statement forecast. So profit forecast, discuss with management the means by which they have a predicted expected revenues, profits. For example, extrapolation of historical data may be inappropriate due to the restructuring. Check that any assumptions made are consistent with one another. For example, if revenue is expected to grow, certain costs would also be expected to increase. 3, compare assumptions made for forecast purposes with the other internal information produced by business. For example, expected sales growth can be compared to sales and marketing plans. So compare assumptions made for forecast purposes with other internal information. Compare budgeted expenditure on research and development with budgets and the final costings on completed products. This is particularly important as the main aim of increasing market share is dependent on innovative products. Research and development is likely to be a major cost. Compare assumptions made with general industry. Yes, the concept of general industry. Compare assumptions made with general industry data and trends, particularly in respect of the building systems market. Compare predicted cost against actual cost incurred. Clarify the rationale behind insignificant cost savings. Forecast statement of financial, the same things really, right? Perform analytical review, comparing key ratios including ROCE, current ratio, and gearing. Determine the way in which the balance for intangible assets has been calculated. Agree proposed additions to tangible assets to capital expenditure budgets. Agree cash balance to forecast information, e.g. cash flow. Determine the level of provisions made in respect of discontinued activities and assess whether they seem reasonable. Compare predicted movements in loans to cash flow. Analyze movement on reserves. Remember, you are seeing these things in the financial statements given up there. Conclusion, it's not possible to give a level of assurance in respect of prospective financial information that is comparable to that given on historical financial information. There are a number of matters that would be considered by a professional accountant even before accepting an engagement to report on prospective financial information regarding in general the precise form of the report this is to be provided and the overall context of the engagement. There are a variety of specific procedures that should be performed in order to provide such a report to Imperial Limited. Ladies and gentlemen, my time is up.